Discover the shocking tales of deceit and downfall in the world of finance, offering invaluable lessons for savvy investors. Hello and welcome back, fellow investors. Today, we're delving into the intriguing world of financial scandals that sent shockwaves through Wall Street and the global economy. These tales serve as cautionary lessons for investors, reminding us all of the importance of due diligence, transparency, and ethical financial practices. So, buckle up as we unravel the details of three notorious financial scandals that shook the world, leaving lasting impacts on investors and financial markets. So without any further delay, let's get started. Number 1. Enron. The Enron scandal, Wall Street's notorious saga, unfolded in the late 90s, bringing a high-flying energy giant to its knees. Led by CEO Jeff Skilling and CFO Andrew Fastow, Enron employed dubious accounting tactics to mask debts and inflate revenues, portraying itself as immensely profitable. Between 1998 and 2001, the company's stock soared to $90.56, but the truth emerged: a staggering $74 billion in shareholder losses. Skilling and Fastow faced imprisonment, exposing the devastating consequences of unchecked corporate manipulation and sounding a warning for investors about the perils lurking in the shadows of financial success. Number 2. WorldCom. Next on our list is WorldCom, once a telecommunications giant but marred by a devastating accounting scandal in 2002. Executives inflated revenues and misrepresented expenses, leading to a collapse that wiped out billions in shareholder value. The aftermath saw thousands lose their jobs, and CEO Bernard Ebbers faced a 25-year prison sentence. WorldCom's downfall serves as a stark reminder of the catastrophic consequences of financial mismanagement and the importance of transparency in corporate governance. Investors worldwide were left reeling from the betrayal of trust, emphasizing the need for rigorous oversight and ethical business practices in the corporate landscape. Number 3. Mississippi Bubble. Now let's journey back to the 18th century and unravel the fascinating saga of the Mississippi Bubble. John Law's financial innovations sparked a frenzy of investment, driving share prices to unprecedented heights. As investors clamored for shares, Law's bank printed more money, fueling the bubble. However, when the truth about the overinflated shares emerged, panic ensued. Investors desperately sought to exchange their shares for tangible assets, leading to financial ruin for many. This historic scandal serves as a cautionary tale about the dangers of unchecked speculation and the fragility of economic bubbles. Number 4. Lessons from Ponzi schemes. In the annals of financial history, Charles Ponzi's infamous scheme of 1919 remains a stark cautionary tale. Promising unprecedented returns, Ponzi lured investors into a fraudulent plan involving international reply coupons. As the scheme ballooned beyond feasibility, new investors funded payouts for earlier participants, creating an illusion of success. The inevitable collapse occurred when media scrutiny exposed the unsustainable model, leaving countless investors in financial ruin. Ponzi's legacy endures, imprinting the dangers of such schemes and their far-reaching consequences on the financial landscape. A perpetual reminder for all investors to remain vigilant against fraudulent allure. Number 5. Bernie Madoff. Bernie Madoff's colossal Ponzi scheme of 2008 shattered investor trust and highlighted the vulnerability of even seasoned financial experts. With fictitious returns masking non-existent investments, Madoff deceived wealthy individuals and institutions, amassing a staggering $64 billion in losses. The scheme's unraveling exposed systemic failures in regulatory oversight and due diligence, underscoring the need for transparency and skepticism in financial dealings. Madoff's eventual arrest and imprisonment serve as a sobering reminder of the devastating impact of unchecked greed and the importance of robust safeguards to protect investors from such fraudulent schemes. Number 6. 2008 Global Financial Crisis. The 2008 global financial crisis was a seismic event, revealing the dark underbelly of Wall Street's unchecked greed. Triggered by subprime mortgage defaults, the crisis exposed rampant unethical behavior, including inflated credit ratings and risky securities trading. Lehman Brothers' collapse sent shockwaves through global markets, igniting a chain reaction of bank failures and economic downturns. The crisis underscored the need for stringent regulations, accountability, and transparency in the financial sector. It served as a stark warning against the dangers of excessive risk-taking and the imperative of safeguarding against systemic vulnerabilities to prevent future catastrophes. Number 7. Wirecard. The Wirecard scandal unfolded as a cautionary tale of corporate deception and regulatory failure. Once a prominent payment processor, Wirecard's downfall stemmed from fictitious revenue reporting. Whistleblowers' warnings were met with legal threats, diverting attention from the company's fraudulent practices. The revelation of $2 billion in non-existent assets led to swift bankruptcy, wiping out billions in investor value. The scandal exposed flaws in oversight and due diligence, highlighting the importance of independent scrutiny and accountability in financial markets. Wirecard's demise serves as a stark reminder of the consequences of overlooking warning signs and the need for robust regulatory enforcement to protect investors. Number 8. 1MDB. The 1MDB scandal unfolded as a web of corruption and embezzlement ensnaring high-level officials and global financial institutions. Initiated as Malaysia's strategic development venture, 1MDB became a cesspool of fraud, with billions siphoned off by key figures, including the Prime Minister. Goldman Sachs facilitated the misappropriation through bond sales, tarnishing its reputation. The scandal's Hollywood connection, involving the financing of blockbuster films, added a surreal dimension to the saga. International investigations continue to unravel the extent of the corruption, underscoring the imperative of transparency and accountability in government and finance. The 1MDB debacle serves as a stark reminder of the far-reaching consequences of unchecked greed and corruption. Number 9. Theranos. Theranos, once hailed as a beacon of innovation in healthcare technology, imploded spectacularly amid allegations of fraud. Founded by Elizabeth Holmes, the company promised revolutionary blood testing technology, but failed to deliver. Revelations of false claims and unworkable technology led to federal charges and the company's dissolution. Holmes, once a Silicon Valley darling, faced legal battles and eventual conviction. The Theranos scandal underscored the dangers of blind faith in innovation and the importance of regulatory scrutiny. It serves as a cautionary tale of the perils of unchecked ambition and the need for transparency and accountability in the pursuit of groundbreaking technologies. Number 10. FTX. FTX, a crypto trading platform, plunged into infamy amid accusations of fraud and mismanagement. Founded by Bankman-Fried, the company allegedly redirected funds to finance personal ventures, including property acquisitions and political contributions. When crypto assets plummeted, FTX and affiliated entities faced insolvency, leaving investors in the lurch. Federal prosecutors intervened, issuing fraud charges against Bankman-Fried. The collapse of FTX, once touted as a beacon of innovation in the crypto space, sent shockwaves through the industry, highlighting the risks inherent in unregulated markets. The debacle underscored the importance of transparency and ethical conduct in financial enterprises, particularly in emerging sectors like cryptocurrency. FTX's downfall serves as a stark reminder of the perils of unchecked ambition and the need for robust regulatory oversight to safeguard investors. As we conclude our journey through these financial scandals, the overarching lesson for investors is clear. Vigilance, due diligence, and an understanding of red flags are paramount. These tales of deception, fraud, and economic downturns remind us that the world of finance is not without risks. Armed with knowledge, investors can navigate these waters with caution, ensuring a resilient and informed approach to wealth management. If you found this video informative, then don't forget to like, share, and subscribe to our channel for more insightful content. Thank you for joining us on this exploration of financial scandals that shook the world. And until next time, stay curious and invest wisely.